It's 9 o'clock Eastern. It is time that we get started on our business funding training tonight with Mr. Wade Cordell. I want to make sure we got Wade with us. I'm making sure he's part of the group. I don't see all the people, so forgive me if it's, you guys might be looking right at him and say, of course he's with us. Okay, I see him. There he is. How you doing, Mr. Cordell?
Great, man. I'm here.
Good. I know you are. We're ready to rock and roll. I'm going to start, as you all know, with a quick overview for a few minutes. So I'm going to share my screen. When I get to the screen, it says Wade Cordell. Then I'm going to turn it over to him, and he's got some stuff he wants to go through with you. So again, welcome. If this is your first Tuesday night training, we do this the first Tuesday of every month. So we thank you for being here tonight. Okay, that's the biz op. Let's go to the funding right here. We thank you for being here. Again, I cannot emphasize enough, watching this is not a complete training. This is each Tuesday night, we try to bring new stuff that we haven't covered before. And we're going to be doing that tonight, going into the checking account statements that the business owners have to submit on the DAC side. And what you can, they're like tea leaves. What do they tell you? And when you have gained that expertise, Wade did something called the red stuff in the Saturday training. And last Tuesday, the first Tuesday of January, he went over the red stuff again. And it's an acronym for certain details on the underwriting. You never have to talk about that with your client, but just having that knowledge, it makes it so much easier to help set the proper expectations for a client. The easiest way to create happiness in a client is lower their expectations. The easiest way to create frustrations is raise their expectations. Right? So you want appropriate expectations. And the way you know that is education. So the red stuff is amazing. So watch the training 1, 2, and 3 in the Agent Resource Center. And we're going to go into some more stuff with you today. Again, you've got a solution for 80% of the business owners out there. Why is that important? Because 99% of all businesses are small businesses. There's 30 million. They employ 57 million people. And pre-pandemic, 1 out of 3 would fail in their first 2 years, 1 out of 2 in the first 5, and 2 out of 3 fail in 10 years. 2 out of 3 businesses. This is before pandemic. And the number one reason for failure, according to the Small Business Administration, the government entity, is 82% cited lack of working capital, not bad idea, not enough customers, lack of working capital to continue. That's the number one reason for failure. But wait a minute, isn't that what the banks are for? Yeah, banks are great for 20% of the businesses who can get approved. The big businesses who've got millions of dollars in revenue, or a house that's paid off that they didn't have to finance to start the business, or a building that the restaurant's in, but they don't own the building, they're renting it, right? So if you don't have collateral, you cannot get business funding. These are the only way banks can help. A credit card, you got to have amazing credit. And how much can you get on a credit card? A line of credit, you got to have amazing credit. By the way, we plan to launch lines of credit soon with some that you don't have to have amazing credit. But if you go to your bank, you need amazing credit. It's going to be some time. We're working through it, putting the process together to simplify it. Secured business loan, that's when you put up collateral, just like a mortgage or a personal mortgage. That's the only way to get funding in a bank, and every one of them require amazing credit, 2 years in business, except the first 2. Those are more personal. But 80% cannot get qualified. That's where you fit in. So you're not competing with the bank, you're cooperating with them. When a bank has to say you're declined, they don't like it. You want to get to know your local managers, because those bank managers and tellers and whoever's in that office has to say no. They don't want to say no. Last week or 2 weeks ago, I got a referral from our local president of our community bank. It's only 3 branches, but I know him well. His first name's Steve. He refers me any client he has to say no to. He doesn't want to say no, right? If it fits, he knows our funding criteria. So we're not competing with them. We can't compete with them. If someone get approved there, they're going to blow our pricing away. But the 80% who can't, we rip everyone's tail because we represent everyone. So we get the best source. So what about the other 80%? They got to go to their savings or their friends and family. That's their only way. They need 100 grand to expand, or revenue-based capital, alternative revenue-based capital, which are providers out there. There's probably 200 of them. 40 to 50 are really good. 160 are scammers. And they're in and out, and they're gouging people Forget missing a payment. My goodness, you'll be in trouble. So we only represent reputable providers. And what happens is they look at your revenue. And if you're doing revenue every month, they say, okay, if you've been doing 30,000 a month in your party store, you're probably going to keep doing 30,000 a month. What if we gave you 40 grand and you paid us back a percentage of your sales for the next 9 months until you've given us the 40 grand plus a multiple on that back? Maybe you got to give us 55 back. We're going to give you 40. You're going to give us 55 back out of your future sales. Your credit score doesn't matter as much. It matters, but not as much because you got predictable revenue. It's pretty secure, right? That's revenue-based capital. Now we represent all the top ones. There's some that are publicly traded, billion-dollar companies who do it, and there's many that are. All of our providers have hundreds of millions of dollars in funding annually, but they're good providers, and we have all different levels of performance we can help. So we offer the cure for the working capital disease, if you will. A business owner who 82% fail for lack of working capital, you need to make sure they know we exist. You're not closing capital. You're not selling them on a loan. You need to make sure they know revenue-based capital exists, number one. And number two, that if they need revenue-based capital, DAC, one-stop, best offer from all the top providers. They apply with one person. Let our experts go to work and find you the best offer. And because all the providers know we've got many providers, they're competing to give you the best offer. That's why we have the benefits. You simply inform them that other sources exist. Now, we have two ways you can get funding for a business owner. On the left of your screen is Bank Breezy, which is on my hat here. That is exclusive to us. And then there's DAC, which is for the larger clients. So let's go through this. Bank Breezy, up to 25K, instant approval, same or next day funding, 100% online Breezy process. They do everything online. Unless they have a hiccup, then it goes to manual. All right, DAC, they can get 25 grand and 2 million, no collateral required, funded in 1 to 5 days, depends on how big, simple process, minimal documentation. All right, so let's break these down real quick and then we're going to get to Wade. Bank Breezy, this is exclusive to you. We own it. DAC launched this. We own it. We partnered with another company to create an all online process. We are in this together with them. We're working on it with them every week, improving it, changing iterations. We've had over 300,000 businesses successfully apply here already. They've not all got approved. In fact, 90% aren't even doing the 5,000 in revenue that they require. But it shows the attractiveness, the viral nature. People want business capital, right? So we help the ones who are eligible, and then we build relationships with the ones who aren't for when they are, right? But they get up to 25,000. Rarely they'll do up to 35, but really we're better off putting them on DAC if they want more than 25. We get them a higher offer. Okay, but they can do up to 25 instant approval, same day funding. Approximate approval amount is 75% of their monthly revenue. Write that down. So if someone's doing 15, let's use 20,000. 20,000 a month in revenue, they'll probably get approved for 15,000. Someone's doing 10,000, they'll probably get approved for 7,500. If someone's doing our 5,000 minimum, they're probably only going to get approved for 2, 3, 4, 5 grand. The payment history, if you're making good payment history to our partner, they'll offer you additional add-on funds. So you can get more money even before you've paid off your first position. All right. And also once you've paid it off, you can get a renewal and get more money. You get paid each time. Now on our Bank Breezy product with Biddy Advance, our partner, your renewals are reduced. It's about 78% you get paid on. All right. Because they're giving better pricing. So we get paid a little bit less. And you can get add-on funds too, as I mentioned, and you get paid on those add-on funds. Now, how does a business qualify? They have to be in business 6 months at Bank Breezy. They can't have any months under 5,000 in the last 90 days. So the last 3 months, they have to have 5,000 in sales, not 5,000 in deposits from an owner, not transferring from their personal account into their business account, 5,000. No, they need 5,000 in sales. Each of the last 3 months, and they can't have any. If they got a month with 4,800, they're going to get automatically declined. The minimum is 5,000. They must have a business checking account in a business name, and they got to have a FICO score of 450 or higher. All right, those are the minimum requirements to apply. They must be a business entity, and they must have an EIN for their business. That's an employer identification number. They still apply with their social security number as well, but they need an EIN to show that they are actually a business entity. Now, this is Bank Breezy, okay? 4 to 6 months repayment. This is the terms. They usually got to pay it back 4 to 6 months. Now it's actually 4 to 7 months. They got to pay it back. Repayment is done via automatic daily deduction. Now, some people, the first time they hear this, me included, first time I heard it, I go, oh, I want to market this, but daily payments, who wants to give daily payments? And then I remember my credit card processing. I accept my former company, we accepted credit cards for juice beverages that we sold. And every day we did all these sales of juice. And at the end of the month, we'd have this big thing, 3% of sales, whatever, this big payment we had to make on the first of the month for all the last month's sales times 3%. And it was in the tens of thousands on the first of every month, sometimes in the hundreds of thousands. Be like, okay, we got to watch cash flow to make sure on the first we can pay the merchant provider. Otherwise, they're going to shut off our credit card ability to take credit cards. It's very hard to manage that cash flow. And so I always said, can you just take the fee out before you even give us the money? If you're going to keep 3% of this $100 purchase, just keep it down, give us 97, and we don't have to worry about on the first having cash flow. Right? Doesn't that make sense? Well, that's what daily payment are. So let's say you have a payment of $3,000 you got to make, or 300 a month, or depends on what size the advance is. But let's just say you have a payment of $3,000 a month to make on one of our bigger fundings, and you got to have that cash flow. Well, if you make a daily payment, it's being slowly deducted from your bank account every day. At the end of the month, you've paid the $3,000, and you didn't even miss it. There's 20 banking days, so what do you pay? $105 somewhere, yeah, $105 a day. And if you got approved for 20 grand, you're probably doing, $2,000 a day in sales. So paying 105 when you're doing 2,000 new revenue, you don't really miss it. So that's why daily payments, business owners love it. They don't at first when they hear about it, but they end up, some don't, but they end up loving it. The cost of capital, the highest risk is 1.29x to 1.69. What that means is for every dollar they get, they're going to pay back $1.29 to $1.69. That's expensive. The highest risk, that's expensive if they keep it full term. The lowest risk is 1.19 to 1.49. Still expensive, right? You're going to pay back $1.19 to $1.49 for every dollar you get. Wow, that's expensive. It is. It is. The question, though, isn't how expensive it is. The question is, what are they doing with the money? If you go to a business owner, and like this guy I talked to today, you maybe heard me say at the last presentation, he wants to buy all new stuff for his donut shop, needs about $8 grand. Well, what's that $8 grand going to do? Well, I'm going to be able to put inventory in there that's probably going to do an extra $15,000 a month in sales. Okay, an extra $500 a day in sales. So, okay, you're paying $8 grand, you're going to do 15,000 more revenue. How long is it going to take to make that $8 grand back? And now if you got to pay 12 grand back out of the 8, because you're paying 1.49, so you're going to pay 12 grand back. How long is it going to take? 8 months, 9 months. And then from there forward, it'll be pure profit. Let's do it. Give me the money. Give me the money. So it's, what are they doing with the money? That's what you ask people. What is your use of funds? If the benefit outweighs the cost, they proceed. If they're buying a widescreen TV, this is too expensive. If they're going on vacation, too expensive. If they just want rainy day funds in the bank, crazy, too expensive. No reason to take on debt. You can't pay it off at this rate, just hoping it goes well. You do this because you have an opportunity to fuel more. Someone gets $2 grand and they don't know what they're doing with the money. That's not smart, because you're going to pay back 3. Not smart. You get $2 grand, but you're going to turn that into a marketing campaign and website for your business, and you're going to generate 20 grand in sales from it. Smart. You're only paying back 3. You're generating 20 grand. So use of funds matters. The Bank Breezy process, real simple. You send them to your bankbreezy.com site. The funding training goes into some more detail, so I'm going to start racing through this now. Online application for immediate approval. They link their bank right there. They enter the routing number and account number and link their bank accounts. So it's all done right online. If they don't do that, then they go to the manual process, but 96% of the time they can link their bank. They get the offer right on the screen. They upload their driver's license, voided check, enter their social security number, it verifies a couple things, and boom, gives them an offer. They sign the agreement. They're going to get an email from HelloSign email. It's not from Biddy, it's from HelloSign. That's our electronic signature company. They sign it, they send it back, they then get a text actually that they have to say yes to, and then they receive the funds. If they do all this before noon, the funds go in their bank that day. If they do it afternoon, it goes in their next morning, okay? Couple miscellaneous things. If it times out during the process, if I'm doing this and I don't know my routing number and account number, so I leave the phone for a little while or I leave the computer and it times out, they're going to get an email back to them. Don't have them start over. They're going to get a text link to continue to resume their application. If they try to go to the beginning, they're going to get a duplicate message and they're not going to be able to proceed. They're going to be, what do I do? What do I do? They're going to get a link sent to their phone and their email. Just tell them to click on that to resume. If they're kicked out to a manual process because they can't link their banks, all right, then what they're going to have to do is email bank statements in to apply at Biddy Advance. All right. If a client's stuck, their fastest answers, if they're stuck in the process, not sure how to proceed, there'll be a phone number right on their screen. It only is displayed after they get the process started. It's for clients. It's not for you. It's for clients to call to keep the process going. So if you learn that number, don't call it. That we want to leave that open for clients. Or they can email Bank Breezy support at Biddy Advance. That's a line that our agents, if you have a question about something, you can email Bank Breezy support at Biddy Advance. All right. And then you're going to get a funded email. So you're going to get status updates all along, but you're going to get a funded email and personal commission is issued to you the next business day. Happy customer, daily funding, daily commission. So back to DAC, 25 to 2 grand. What's the funding amount? You can get from 25 grand to 2 million. Now you'll get, like, we had a DAC client only got 15,000 today. Sometimes they got other positions or different things and they're going to get less, but our focus is 25 to 2 million. Approximate approval amount. Look at this though. Instead of 75% of the funded amount, it's 1 to 2 times the funding amount. Okay. I'm taking a little long here. Try to wrap this up in the next 2 minutes. 1 to 2 times the monthly revenue. Frequency of deposits help. Bank statements help. Number of NSFs hurts. Frequency of deposits means how many deposits do they have coming in per month? Are they depositing money every day like a credit card does? If you're selling with credit cards, they have deposits every day. Or are they only getting 1 deposit a month? Ooh, that's scary. What if that goes away? Average daily balance helps and hurts. Payment history earns them more. Qualifications, they only need to be in business 4 months, but they still need at least 15,000 per month in revenue the last 3 months. All right. Business checking account, 500 credit score instead of 450. We have approved some under. They got real strong statements, but a last filed business taxes if over 150K. So you're never going to need their last filed taxes if it's under 150K, but if it's over 150, sometimes you will. I shouldn't say never. I guess to prove you're the owner, sometimes they want you to do that. Terms, you can get longer. You get 4 to 24 months. Repayment via daily auto deduction, sometimes weekly, never monthly. Monthly payments does not exist in the revenue-based capital world anywhere. Otherwise, we'd represent those providers and do it. Cost of the capital is 1.19 to 149. Same thing. For every dollar you get, you're going to pay back $1.19 to $1.49. You do get prepayment discounts if you pay it off early. And there's a simple process. DavidAllenCapital.com. They fill out the online form to apply. They must upload their bank statements, voided check and driver's license. So they don't link their bank account. They upload 3 months bank statements in PDF form. Okay. We then request a 1-page paper application for them that is sent to them that they fill out and send back. Okay, that's changing in the near term, but that's how it is right now. Eventually it'll all be online. Offer, we then go find the best offer from them. You're getting status updates all throughout that app started, full package received, approved amount, etc. You're going to get email status updates. And then they sign the online agreement. And after they do that, we go out back to the provider, they do the final underwriting and they receive the funds. Now, all along, a client can be moved to decline, obviously. There's clients who get declined, but over 80% of our clients get approved for funding if they're eligible for funding. And they get the funds. A couple miscellaneous things. Our team will be reaching out to your client, but we recommend you reach out as well. The number one fall off we have is getting that signed paper application back. So if you don't see your status go from app started to complete package received, we're still waiting for them to give us that application. So sometimes it helps for you to reach out to them and let them know. You'll get a funded status email from us the next day, and then compensation will be provided to you the next day. If it's your first funding, whether it's Biddy or DAC, your first funding you get, We're going to ask you for your routing number and account number so we can set up direct deposit for you and pay it. And we are working on a DAC debit card. It's about 90% there, and we'll have everyone set that up when they start, and we'll be able to pay to that. We're moving along, and it's pretty neat, transferring money anywhere in the world, and it's neat things. In the training center, there's a sheet that overviews everything I just talked about. It's called our Funding Quick reference sheet. It's got everything and all the slides on one document. All right, so I'm not going to go through this now, but know that it's all there. And then we also have a second page to now the funding process reference. So the process is also referenced there, that you can pull that sheet. So I know that was just an overview for people who haven't been through the funding training yet. And we went into a lot of detail, but without it, people are misunderstanding the process. So now you got it. So, but what we really want to do, what I'm really excited to do, is bring on Mr. Cordell, because Wade is excited to cover this portion as well. I'm excited he wants to and is excited to. Let me pull him up ad spotlight first, so we're together here. How you doing, Wade?
Man, how you doing?
Good. You know, Wade is starts super early in the morning, so he's not a big fan of me putting him on at 9 o'clock or him coming on at 9, but he's willing to. But I never like taking too long, because I know that he's burning the midnight oil when he's up past 10 o'clock. He's up so darn early in the morning, working out and everything else. Wade, you're doing all kinds of stuff now at the gym, not just taking care of DAC.
Let me ask you, do I need to turn my speaker up? Can you hear me fine?
I can hear you loud and clear, my friend.
Perfect.
Loud and clear. Now, you are going to take over and share your co-host. You're going to take over and share your screen, or are you just talking tonight?
Nope, I'm going to share my screen.
Okay, so let me remove me and get me out of here. But for those of you who don't know Wade, Wade started a funding company. He and I met. He then decided to partner up with us, and he's been our senior funding officer since 2016, 17.
15,
literally
16.
Yeah, literally funded thousands of clients. Brad, his brother Brad, works in the funding office as well, and helps take all the packages in. They look at thousands of packages, talk to thousands of clients. So we got Lindsay on the renewal team. We got an amazing team. But Wade has seen it all. Underwriters call him on packages. So he's like a senior underwriter, as much as we don't do underwriting, legal underwriting, but he looks at bank statements and can dissect them. So Wade, it's all yours, my friend.
Thanks, man. Listen, guys, the next time that we do a bank statement review, I'm going to have actual bank statements that I can go over. I'm going to have them redacted, different like account numbers and all that. I didn't have time to do all that this time, but I think you're going to get the gist of the importance of bank statements. The initial review of the bank statement right before we send them to underwriting is crucial. Underwriters don't like to get bank statements that are fraudulent, that are don't qualify, that have all these different problems. Sometimes they slip through and I miss a problem, but very, very seldom does that happen. Now, here are really 8 different things that we're going to be covering tonight that have to do with the issues and things that we look at when we see a bank statement. I mean, so many of you, hopefully I'm answering some questions when you say, hey, they're doing $100,000 a month. Why did you only give them $20,000 offer? But you forget to look that they got 15 cents left at the end of the month, so they can't even afford another funding, or they got 13 NSFs every single month. You don't look at those kind of things. So these are some of the things that I want to talk to you about. We're going to talk about revenue, about all 3 of the bank statements having a minimum of 5,000 and some other things. We're going to talk about deposit numbers, transfer accounts, negative bank days, negative month ending. Why is that important? Altered, modified bank statements, personal bank statements, and then other MCA positions. These are really the 8 issues that are the most important to underwriters. So let's get started. And we're going to do this pretty quickly. Number 1 is revenue. As David said earlier, the very minimum that we're going to fund in revenue is 5,000 worth of monthly, but it has to be every single month. There is no exceptions. Don't call me and say they had COVID last month and they just couldn't work, regardless of what their reason is. If the money is not going through their bank account, is not going to count. That revenue, by the way, has to go through the business bank account. It can't be in the PayPal account. It can't be in one of these other electronic card accounts. It's got to go through their business bank account. I want to give you an example here. In month one, let's just say that they had $7,600. Hey, they passed. They got enough revenue there to qualify for funding before we look at all the other issues. In November, they get 12,000. Well, they pass again. But then in December, they're under 5,000 at 4,900. They're a decline, guys. There are going to be some exceptions to this, but very few. If they're doing under 25,000 a month for sure, and they get 1 month, I don't care what the reasoning is, they get 1 month and it's under that 5,000 mark, they're going to be disqualified for funding. They're going to have to go out and look at the next month and see if they can get that thing back up, and then I'll have a story I can tell the underwriter. Now, let's look at another scenario about the revenue. In October, they had 77,600. November, they had 121,000, and then they dropped down to 20,900. I'm going to tell you that 90% of you would be calling me saying, "Hey, yeah, this is the reason they dropped down. Listen, this guy wants $80,000. He wants the average." You can forget taking 3 months average when you have that significant of a drop. They're going to want to know what in the heck's going on. Why did this drop? It better be an incredible explanation. It better be that the bank closed down and it was switching over. Because you're not going to be able to go get that average when these kind of significant drops happen. These are the things that underwriters are looking for, and they want to make sure you're going to be here to make those payments. Number two, we're going to talk about deposit numbers. Our lender partners almost always require a minimum of 3 deposits every single month, and the exception is on A paper lenders. They actually judge the file totally on revenue and business type. For example, let's say that you're doing $25,000, $30,000 a month. You're not an A paper. You're more of a BC. Your credit's good. It's not great. And you submitted your files, and you've got 1 month where you got several months where you got 1 or 2 big deposits during those months. Well, if I'm an underwriter, what I'm going to say is, man, what's going to happen if they lose one of these clients? And if they do, then that's going to cut their revenue in half, and they really can't afford this much funding. So those are the things that they look at, and this is the reason behind having at least 3 deposits, because if you lose 1 or 2 of your big clients, I mean, we had a couple cleaners just over the last week that clean buildings, and they get like 30,000 from one client, and then the other 2 clients like 1,500 each. That's a very hard sale for an underwriter to accept. Now, if that was a 50 or 100,000, they had great credit. They were a paper lender. Their credit was in the 700s, and they didn't have all these issues. Then they don't really care about that 1 or 2 because of the credit. These people have proven that they're going to go out and they're going to make success out of their business. So deposit numbers are a very big issue here. Number 3, transfer accounts. Now, this is probably one of the top 3 reasons I get phone calls from agents as well. They're concerned. They're saying, look at all this revenue. They had 75,000 a month, all 3 months. Well, no, they really didn't. They had about 22,000 every single month, because all that stuff that you're looking at as revenue, it really isn't revenue. A transfer account's an account that's owned by the client that has continuous deposits going into the main account that they submitted for underwriting. These can be personal, they can be business accounts, and we're going to require that the client send us a copy of the last 3 months bank statements on these accounts. And if the accounts are personal, then we're going to just ask for the front page. We're not interested in looking at that person, but anything being transferred out of one account into the other, and you're only giving us that one account for underwriting purposes, then it's not going to count as revenue because it didn't come as sales revenue. It came as transfers. Another situation, PPP loans or loans from a bank or any type of revenue where let's say the business owner says, "Hey, I'm gonna infuse $50,000 worth of capital into this business." That's not revenue, and it's not going to be counted by any underwriter on the planet. So just remember, transfer accounts are things that we're going to have to go back to the client and ask them for. And we've done it probably 6 times in the last 24 hours where and that's what I look for, because if I don't look for that and Brad doesn't look for that, our team doesn't look for that, then we send this to an underwriter. Guess what? They're going to kick it back and they're going to say, we need these transfer accounts, and there's 2 different transfer accounts that we need, and then they're going to put us on the bottom of the pile. Now, they're not going to put me on the bottom of the pile mainly because I'm not going to let them. I'm not going to say, if I make a mistake and do that, I said, listen, I know what you're getting ready to do. Don't put me on the bottom of the pile. I'll get this to you very quickly, because we jump on these very, very, very rapidly. So transfer accounts are not real revenue. Number 4, negative bank days are going to really impact the underwriter in a big way. There are really 20 banking days. Some months have 21. There's 1 or 2 that has 22, but mainly there's 20 banking days per month. So if you have 5 negative bank days, I don't care what your credit is. I don't care who you are and what your business is. If you got 5 negative bank days, it's going to be a very hard sell for an underwriter to not decline this or say you need to go another month and not have all these negative days, because that's really 25% of the entire month's ability to deduct their payments. And if it's a weekly payment, guys, and if that happens on a Friday, man, that's a big thing, because that's really 5 to 10 payments that they missed all of a sudden, because you may have missed two of those weeks in a row, and all of a sudden now the underwriter saying, man, we've got to do something here. So negative bank days are a big deal on these bank statements, and sometimes these bank statements never get it to the underwriter if it's especially B and C paper, and really D. Well, I mean, all 3 of those. When we look at that and we see there's 5 negative bank days, and we see that there's very little daily balances coming in, that file is not going to get to an underwriter's desk. Number 5 is negative month ending. That's another thing that we look for. Negative month ending of a bank statement does not always create a decline deal, guys, but there will be other factors that are going to be looked at when this occurs, such as daily balances, how long the account stayed negative, and the amount of the ending negative balance. For example, yesterday we got one that was minus $4,200, minus $4,200 at the end of the month. He only had 2 days negative those last 2 days, but it's minus 4,200. Well, the client's only doing 15,000 a month in revenue. So that's a big deal when you're minus that much. So those can highly impact what an underwriter is going to decide about this file before he ever even looks at FICO or anything else. Altered or modified bank statements. I probably get at least 2 calls a week from clients who are angry with us because they said my bank statements are not modified. Let me just tell you something. I'm trying to be very careful when I send to an agent or actually put on I'll put on the spreadsheet for Sharon or our other support team to send out to you the information that says these bank statements were altered, because the first thing that client's going to be is defensive. I get probably at least 2 of these a week where the funder says this this client is not eligible for funding. Well, I automatically know it's one of two things. It's a background that they've already done, or it's some type of fraud. And most of the time it's fraud. And they don't say that to me. So I have to call that underwriter to get specifically what's there. And if it's really bad, I'm just not going to tell the agent all the bad stuff. I'm just not going to be able to do that. You just have to trust me on that, because if you get that information, I mean, we're not trying to get anger clients. We had one that went on our trust pilot and talked trash about us. And I know they modified their bank statements. I looked at them, I saw them, and the underwriter saw them. It was just blatant fraud. But they're claiming, oh no, that's just not true. But then when I go back to them and say, okay, not a problem, you say that they're not, and I'm sure you're telling me the truth. We need to do a decision logic and be able to go, or a manual login and look at your, oh no, my bank said never, ever allow anybody to do a manual login. So guys, each of these lenders have a very sophisticated system, whether it's Plaid, whether it's Ignite, that they enter downloaded bank statements into it. And it shows all the altered, doctored, modified words, numbers, lineup, everything on that bank statement. Banks don't have bank statements sent out that aren't accurately lined every single time. And it's so easy for me now to see a modified or altered bank statement. It wasn't that way when I first got in this industry, but now Brad's getting very good at it. Other team members are great at it. But even though I know some of them are probably altered, if they're not grossly altered, I still send them to the underwriter and I let them know that I suspect it, but I don't know. The reason we don't want bank statements from your clients, that I know a lot of you say, well, they're old school, they don't use the computer. Well, if they don't have online banking, first of all, they're not going to get funded with anybody in our industry. You have to have that. But we want downloaded bank statements, not bank statements that they copied through a machine and then sent to us. Because when you copy it through a machine and send it to us, then the underwriter and their team, his or her team, that team has to go through every single page, every line, everything on that bank statement to make sure it's not altered. That's why we ask for every single page of the bank statement. So we really want them to download these bank statements to us, and we're getting more systematic where we're going to be able to have all these downloads automated, I should say, and we're going to be able to only allow those kind of things in the past. So this is a big deal in this industry. It really is bigger than you think. And just because your client tells you that they've never done anything wrong and they got a halo over their head doesn't always run true. Now, I've had situations, and had one this past week, and David and I discussed it, where the underwriter came back and said, you know, we're not doing this. This person's got a background, blah, blah, blah. I did my investigation on that, and I came back and said, you get the wrong dude, man. And I went back to the underwriter, and we turned that, what was they're trying to do as a decline, into a $400,000 offer over 18 months. So we do our job, they do theirs, and then we both kind of track each other, the underwriter and my team. Number 7 are personal bank statements. That's another thing that we look for. 100% of our fundings are business advances or loans. We do not offer any personal loans at this time. Therefore, we're only deduct payments from business bank accounts only. Every sole prop must have their business name appearing on the statement. And there's one exception to that. Some banks, especially credit unions, even though you're a sole prop and you have a business name, they only send the bank statements in your name. But I can go look at that bank statement, and if the bank statement says business checking account, and it will, then I can get that overwritten. Now, just because a business person says that they always use their personal bank statement and the bank account as their business bank account, that doesn't mean that we accept it as their business bank account. It's just, the facts are, we just can't accept personal bank statements. And that is, and this happens a lot whenever we have a business that, and I think we had one this week that they had the name of their business on the application. They sent two sets of bank statements, a set of bank statements that were personal, and a set of bank statements that had nothing to do with the name of the business. So we have to look at that. We have to contend with that every single day. And then finally, excuse me, guys. This is probably the number one confusion out there for agents, and that is in other MCA or merchant cash advances or findings like we have that are already in place. This is a big complaint from clients that I'm doing 100,000 a month. Why aren't you giving me 100 to 1 to 2 times 100 to 200,000? Almost never will an offer be provided that is higher than the last MCA funded position. And most lenders aren't going to fund past a third position, and rarely will a lender actually pay off a first position. A lenders will, but most of the time they won't pay off positions. And here's why. They don't want to come in and there's 3 positions out there owing 70,000 and give you 100,000, and all you're going to do is turn around and take that 70,000 and you're going to send it over to pay, or they're going to send it to pay off the other lenders, and that means you only have $30,000 that you can use to grow your business with, and that's their mentality. Though I would look at it if as an agent and say, well, yeah, but we're helping them get rid of that other payment, so it's really helping their cash flow greatly. Well, here's what that underwriter's thinking. Yeah, you stack that last first position that you had and you put 2 other positions behind it, you're probably going to stack us too. I mean, think about this. It makes perfect sense. So if today I have a file on a transportation company, that transportation company is doing about 60 to 80,000 a month in funding. 5 weeks ago, they took $12,800, so it's really about a 13.5 deal they took from another lender. So only a few weeks ago they took that from another lender. So we're already looking at a second position funding, and you subtract that money out of the monthly revenue, because that's not going to count. Then the revenue average goes down, plus no DC D paper out there is going to ever fund more than the last position that was funded. If there's multiple positions, they're just not going to do this. In other words, let's say that they did 18,000 last month, and then they would have qualified for 40,000, but they're not going to fund over that 18,000. It's probably going to be closer to 15 or 17, or maybe equal to the 18. Why would they do that? The last lender wouldn't do it. So these are the things that we look for, David, on every single bank statement. So it's not like we're just glancing. I mean, we do it quickly. I mean, I'm really good at this now, and because of all the years that we've had to do this. And when I know that if I miss something, the lender's not going to miss it. But I understand by reading this bank statement, who do we need to send this to? And there's about, you said there's about 10 that we normally send to. There's about 17 different funds that we look at. And you, after you take all the A and D out, the C paper and all is going to go. They're really going to go to about 4 different lender partners that we have, and more lender partners are requiring longer times in business if you've had all this stacking that's going on. So, David, I am going to stop sharing and turn it back over to you and anyone else that has any questions. You there, David?
Unmute myself. Let's go to questions at this time, because there's a couple questions that came in. PK said, her understanding was you need 4 deposits per month. She's wondering if it's been changed to 3 or is
It's always been 3.
okay.
I've never known it to be 4.
Okay. So there you go, PK. That's and that could have been something I said because my original understanding with our original partner was they required 4. So maybe there's an old training I did where it says 4, and that's where you clicked on with. Another question. Do you mean positions? Wade, what do you mean when you say positions?
These are other fundings that they have outstanding with different lenders. So that means that you went out and you borrowed money from 3 and 4 different lenders. So if you're the first one to borrow from, you're position number 1. If you're the second one, you're position number 2. If you're the third, you're position number 3. And guess what? If that deal goes bad, guess who has rights on that whole deal is position number 1.
Right. Yep. So,
They're going to get
and
paid
we're talking
anybody.
about, and what Wade's talking about, guys, is our type of funding, which is revenue-based, alternative revenue-based capital advances or term loans with a daily or weekly auto deduction payment. Okay. And so on the bank statements, you had somewhere I loved how you had the revenue going up and down and stuff. If someone's got a drastic drop, like your screen showed, and they did 110 and then they did 120 and then down to 24, there's a good chance it's going to be declined, right? Because they're worried about that 24 going down to nothing.
Yeah, I doubt they're going to be declined. I doubt they're going to be declined, but I can tell you they're probably going to be closer to that 20 mark on the first funding that they do. And that's what my explanation to them is this. I say, listen, this is revenue-based funding. There's no collateral involved. You drop down to 20, prove yourself for the next 45 business days that you're going to be that you're going to have something, you're getting back to where you were or whatever the reason is. And if you're willing to do that, then I'm willing. Our underwriters are willing to give you some type of funding. And most of the time, David, I can get the underwriter to say, listen, I'll give you 25 now. And in 30 days or either 2 weeks, just show me that your revenue is going back up. I'll give you another 30,000.
All right, there you go. So it just shows the trend going back and it's predictability of the revenue, right? Typical time for funding to be completed for a client who meets all the needs on the DAC side.
Same day. If they met everything, if I got a clean file, or if I've got everything that I need and I submit that, I can usually get them funded the same day as long as they make here's what really holds up is probably more than anything is the client making a decision. You know, I think a lot of times it's expectation of what they thought they heard from the agent, or maybe they did hear it, and they thought they were going to get what an amount, and the agent doesn't know they got a 520 credit score, and they're doing 60,000 this month, 20,000 the next, 15 the next, and the agent's only heard that 60,000, so the agent's saying, well, yeah, you can expect about that or more. The reality is that that clients don't always give you enough information for you to make that decision to tell them what they can get. Usually within 24 hours is a good. I mean, if they accept the deal, I mean, we had quite a few in the last week that on the DAC side. I mean, we had the one that was 115,000 that, I mean, I got the file in by lunch. I had them the offer. They said, yes, we funded them by 3:30.
Now, quick question. If someone is doing revenue and they're using their funds at MGM Casino, or so their use of funds that their underwriter's looking at, do they ever look at the use and determine it's too risky?
They always, when they see consistent money going out, and this has happened many times, where they thought, well, this guy's a big gambler, that can affect even, they can be turned down actually, especially if they're losing a lot in casinos. They do look through the bank statements and they look at what, where the money's going. And so if they see money going to weird places like a casino, underwriters, that's what they're trained to get, and that's what they get paid for.
Yep. I had a personal client, as you know, who had that and didn't for the first 2 times, but her third time, her bank statements started getting littered with deductions at the casino, and they turned it down. Actually, they approved it for a smaller amount to say, but if you withdraw from a casino, we're not giving you any more. And she did. So unfortunately, some people can use this for bad, right? Okay. If you have any questions, Morgan, do you have any questions that didn't get answered, or Sharon, you want to ask Wade?
You guys can raise your hand too.
Yeah.
Yeah, the only one I see that was just asked, someone said, what is the lifespan of the loan approval if the client does not sign right away?
Great question.
Well, it depends on the time of the month. If it's toward the end of the month, they got to the first of the next month. It could be just a couple of days. These things can stay open for a couple of weeks, really, with some of the aid paper. But most of the time, we try to get them to make a decision one way or the other for 2 reasons. Number one, they're going to go shopping, and everything changes when they go out there shopping. And should that lender through another organization get that same paperwork, they're going to kill the offer. I don't mean say, hey, we got another offer, and they're going to kill the offer because they see you're out there shopping. This has happened 2 times in the last week where they signed paperwork with our lender partner and that same lender, and the lender said, we're not funding you. You're now not going to be able to get funded. And by the way, a lot of this stuff, when they go out there and they modify checking accounts, I meant to say this earlier, when they do a modification of their bank statements, or in other words, they commit fraud, they're changing, they get put on what's called data merge. And data merge, you don't ever get off. And they keep that out there as an alarm to all lenders to say, hey, they tried to get funding last year, or even 2 years ago, or 6 years ago, and they modified their bank statements and altered them. You proceed at your own risk.
Fair enough. Good stuff. Yolanda Jones has got her hand up. Yolanda, if you can unmute yourself and ask your question. You don't have your video on, so we're not going to share you, but what question have you got for Wade?
My question is, once the client is approved for the funding, I'm curious, is that the only time you look at the client's revenue history that's coming in? I think you said something about, or is it just the first 3 statements once they're qualified? Do you go back and check out things pertaining to this client's revenue coming in, or how does that go?
Normally we don't go back, but here's what does happen 100% of the time. We do what's called a bank verification. And in the verification process requires them to do what's called decision logic, which is a third-party vendor out there, so they don't have to give us their username and password. And we're able to go in and look at their bank statements. And by the way, when we go in and look at that bank statement, we can usually look back 6 months if we want to. They can look back. So they don't normally do that unless when they're looking at month to date, and that month to date is almost no revenue in it. Heck, I had one, the guy had got 69,000. All he had to do was accept the 69, and he took 3 weeks of, I don't know. So all of a sudden, the 4th week came, and we're in the middle of January, and he says, I got to have it. I'm ready to have it. And by the way, I had him with a lender that doesn't even do bank verification. They don't do funding calls. They were ready to wire that money. But when he took that long, they went ahead and they looked, and they found out that he only had 3,900 for the whole month. So he killed the deal. Time steals deals.
Okay,
So
All
when an
right.
offer is open, when Wade says it may be open for a couple weeks, when you cross into that, he also said if you cross into a new month,
Ready for the
it closes
beach.
it out. They're gonna have to new underwrite it.
Spring is on the way. Spring is on the way. Getting that beach body there, Mark.
Spring is on the way. I'm ready.
All right. Yolanda, I love it. Okay, let's go to Portia. I don't have my glasses on, Portia. I think it's Portia Kyles. Yeah, Portia Kyles. If you can unmute yourself. There you go.
Hello. Okay,
Hello.
I wanted to ask a question in the chat, but it was kind of difficult. So I know about 3 business owners under Coverall franchise, which is a cleaning franchise. They get different contracts, but Coverall pays out once a month. And I know you guys said they have to have 3 deposits, but if they only get paid once a month, how do you go about doing that? Do they have to show like the multiple contracts that they actually have? Because Coverall pays them in a lump sum.
Well, that's a good question. And let me just tell you, unless they're A paper, they're not going to get funded.
A paper meaning what, Wade?
Meaning their credit scores in the 700s, they're doing north of 35, 40,000 a month in revenue. They're just not going to get funded in our industry with one deposit.
Yep. I had one client. He was a truck driver. He drove for BMW and had for years. And he would do about $100,000 a month in revenue. But he only got one deposit a month, and they gave him approval for 20 grand to test it. But it took, he had great credit, and he was doing 100,000 in revenue, and they only gave him 20 because BMW closes that account. He has no revenue. So one deposit's hard to get through. Great question though. Pastor Mark, how you doing, Pastor Mark? You got a question for Mr. Cordell here?
Yes, sir. Can you hear me?
Loud and clear.
Oh, wonderful. Hi. Okay, so I was just wondering, there are ministries and churches that are LLC, they're incorporated, they have 501(c)(3)s. Some of them have made, they've constructed businesses like grocery stores and things of that nature. And I wanted to know if they have the revenue, if they have the months of being opened in the time that, that's required for funding. Do we actually offer funding to these churches with 501(c)(3)s, LLCs, and that are incorporated or not?
As long as half their revenue comes from other things besides ties.
Okay.
It's going to have to come from having a store, like he said, having a home for women, unwed mothers, or they're going to have revenue other than from just the church. And someone at that 501(c)(3) is going to have to sign and on the dotted line there and have the authority by the board to make that decision. As long as those things happen, absolutely, we can fund them.
Thank you very much, sir.
Thank you.
So to
Thank you,
confirm,
Dave.
you said as long as they have 50% or more coming from revenue generating sources other than tithes and offerings. Is that right?
Correct.
Okay.
Correct.
Bookstores and things like that, whatever. Okay.
And I'm talking about churches specifically. Now, if you're a 501(c)(3) and you are an organization that like you selling clothes and whatever, and that's how you make your money, but you're not nonprofit that way, that's okay.
Oh. Okay.
Very good.
Wow.
Thank you, Pastor Mark. Glad to have you part of the team.
Thank you, sir. Just signed on a couple days ago.
All right. We're glad. What's your last name, Mark?
It's Green.
Mark Green.
Yeah, I
All
signed
right.
with Janelle Harris, and I've been getting some leadership from Miss Peggy Evans.
Beautiful. Well, glad to have you part of the team, and our support department's here for you, and we're here to take care of those clients.
Thank you very much.
Send them all. Appreciate you. Thank you very much. All right. Any other questions or comments for? Let's go with questions first. I'm looking through the questions myself. Sharon or Morgan, did any more come in?
Yes, David, there's been several that have asked if they can get copies of these slides.
Yeah, we can turn these into a PDF, right? We can turn them into a PDF and post them in the Facebook page, get them out. Time. Okay, so can you share if someone's taken a long time, Wade, to accept an offer? Does that cause concern? PK says it does, and I agree. But can you reiterate for everyone what that may also tell the underwriter that they may be looking for deals elsewhere, stacking, things like that? Can you explain what stacking is for our newcomers and then how that could affect it?
Yeah, that's the first thing that an underwriter says is, they're out looking. And the sad part about it is they don't know where they're looking. They're going to get dings on their credit because most of these unscrupulous brokers that are out there sending them everywhere, they don't care about that. And we make sure that our lender partners do a soft hit, a pull. In other words, they're just looking at FICO. They're not going in depth. But a lot of these actually pull credit on them. And when they sell these deals to experience sales, all these they're going to start getting their leads, their trigger leads. So when someone's run their credit one time, then that trigger lead goes out and it is a free for all out there. So you're just doing a very big injustice to your client by doing that. But what I can tell you is that what we're trying to do, we're giving them a week at the most. And if they're not going to move in a week and they can't, it's a difference between trying to make up your mind and you or either having a job that you're going to need the money for, but it's 2 weeks from now. That's different than you being out there and you don't even respond to us. If they're not going to respond to us in 3 to 5 days, they won't reply, email, text, or phone calls, and we call them a lot, and they won't respond. Then we're moving on.
Yeah, and the stacking. Can you explain what stacking is?
It's all those positions. It's when you go out and you get funded from someone, and you got somebody waiting in the wings to fund you right behind them. And most reputable lenders won't let you stack the first month or so unless it's behind an A lender. And listen, I've gone to A lenders before and said, listen, you only give them 150, they want 200, I'm gonna put another 50 behind it, and they're okay, but they want to be told. But stacking means you just stack one loan on top of the other, on top of the other, on top of the other, on top of the other kind of stuff, and that's stacking. And if you stack any of these A lenders and they find out about it and you haven't spoken to them, you won't be ever getting funding with them again. It won't happen.
And they can call your advance, make you pay it off.
They actually can. They very seldom ever do, but they certainly can.
Yeah. So folks, what some people do is they apply to 5 or 6 different places. It's almost like some people apply for 5 credit cards at once. And if you apply all the same day, you may get approved for all of them. You apply a week later after you just applied for 3, you're going to get declined for most of them. And it's the same with this. They try to apply at many providers at once. And if they start to, and by the way, they all they have ways of knowing. You don't catch all of them, but it's a violation of the terms. You can't do it unless it's been disclosed and you're getting a second position or something. But so stacking is it's a bad thing. And when someone's taking time, they're usually shopping, trying to apply and line them all up to get it all the same day. They're trying to get all these approvals in line. And by the way, deals get killed by the underwriters because they'll get an application from another provider for the same client. And as you talked about last week, Wade, so they apply through us and they apply from someone else and they go, wait a minute, they're stacking. If they got 3 people sending us this application, they're applying all over the place and who knows what they're going to accept, who else has approved them. So all of a sudden the deals get killed. So make sure the clients are just coming through us. Or if they want to go through multiple, just go through the other then, don't use us. But we've got 2 more, Cameron Burrell and Ellen Wynn. So let's go to Cameron first and then we'll end it with Ellen. How you doing, Cameron?
Hey, Dave. Hey, Wade. How's everybody doing? Just want to ask a question, Wade, and Dave. What about agriculture? I used to be in that space. I know, season's coming up. Guys are getting ready to start, getting their seed, stuff like that, equipment, things like that. But, how would that work? They harvested, say I used to do soybeans, but, that payment came in November, and here it is, they're, maybe trying to do that. How could I work that, if I'm talking to farmers and, trying to get them on to understand this process on the DAC side to like, hey, you can try to bypass the big banks, kind of maybe try to come to you guys. How would that work? What do I need to get in my head, like kind of now going forward into the next couple of months? Thank you.
It's a good question. And we do fund agriculture, but on all agriculture, you're going to have to get 12 months of bank statements. That way we can look at what they've done over those 12 months. Are they going to be able to afford to make the payments if it's a long-term deal on the off season when there's not a lot of revenue coming in? So that's what they want to look at.
Okay. All right. Thank you.
All right. You're welcome.
Great question, Cameron. All right, Ellen Wynn. Oh, wait, well, Rick's got, we got one more. This will be the last question, Rick, and then Ellen. Sorry, Ellen. I know we'd like to have you go last because you always bring the rain for us. Rick, if you can unmute yourself and ask your question, that'd be great. There you go.
Yeah.
You can hear you loud and clear, buddy.
Just give me a sec. Okay, here's my question. I already posted on the chat, okay? And it's about startups because as I am an entrepreneur, okay? Many startups, okay, look for funding, especially in different stages. Are there any special loans for them, or it's just has to be a business, or has to be any kind of company formation? Or in case, because startups usually they have different stages. It's different from a regular company, right?
Sure.
So when they get, sometimes they bootstrap, sometimes they get initial funding, and sometimes they're looking for seed funding or something, and then to continue, and especially when there are SaaS. Okay, models.
You've got you. I totally understand, Rick. We understand what you're asking, and I'll hit this first wave, and then you can add to it. Fair enough. Startup capital, we don't do any startup capital, Rick. It does not exist in our space. We do have some things we're working on to try to help business owners who are starting up, but it'd be a personal loan, really. The only way for startup is, as you know from your experience, is angel investors, maybe some venture firms who are willing to fund it, but no one will give revenue-based funding to companies that aren't yet producing revenue. When I first got in the space, you had to have 1 year in business or 2 year. Now we can actually do a business that's got 4 months in business. We can help them if they have revenue, but unfortunately, there's not a provider out there who will help startups accept credit cards or banks, and they're putting up collateral and have great credit. So that's the unfortunate thing. It's startup funding is really credit cards or personal loans.
Okay.
All right.
Okay. Great.
We are looking. We've got some things we're working on. As you can imagine, we've had 280,000 people apply at Bank Breezy who weren't doing 5,000 a month, but they're business owners and they're looking for 1,500, $3,000, $4,000. So we're working on some things to try to have a solution for them, but it wouldn't fund a startup company who needs 50 grand or 100 grand. That's angel investors, unfortunately. All right. Wade, did you want to add anything to that, buddy?
I was going to say exactly what you said.
Okay, beautiful. Well, thank you for your question, Rick, and welcome to the family, buddy. Ellen Wynn, 3-time agent of the month. Hey, thanks for sharing at the end of the business opportunity overview. Really appreciate what you said. I didn't thank you then, and I felt as soon as I stopped, I thought, I didn't even thank her. So thank you for all the kind words.
Well,
what do you got for us?
It's easy to say those kind of things because it comes from my heart. Wow. Here I am. I've been with DAC for 3.5 years, and I'm on the second Zoom tonight. business opportunity, now training, and we've got new people that won't even come out and pay attention to the training. I learned so much tonight. Wade talking about the 501c3s. We were at a point where we weren't funding any nonprofit. So that's great news. That's new news to me. So thanks for sharing that. And I'm glad that I showed up and took the time to be here. But I'd like to summarize something that you talked about, David, a week and a half ago on an agent call. And then you touched on it again tonight, where we had a couple of deals that got killed because we had an offer out there and their agent, their DAC agent, is a broker with other funding companies. So I'd like to just summarize that from my perspective as a team leader and having interactions with people on my team that do work with multiple companies. I had one conversation in particular, and I shared this with Wade, talking about how a lot of times that business agent with DAC is out here trying to make a commission, right? They're looking to help business owners, but the bottom line is they got to feed themselves and they got to feed their family. So they're trying to make a commission. So they're out here shuffling and getting that package in front of as many lenders as they can, not understanding the damage that they do to the client. So I had a conversation with one agent on my team that is doing exactly what I just described. And I said, I listened to him and I said, hey, let me ask you, what are you making commissions on those? And he went down the list on what he makes from this lender and this lender and this lender. And not a one of those lenders paid him what he can make with DAC. So here's what I responded back to him was, I said, first off, you're doing a huge disservice to your client, okay? Because DAC, Wade just covered, we've got over 17 in-house lenders. So we're one of the largest lending platforms in North America. And when you submit a package through us, your client is getting a view from all of these top lenders and have an opportunity to have a competitive bid on that, which would be a better bid than if they went to the lender directly on their own, right? So now your client's getting the best offers from all the top lenders. If you go through DAC first and use that as your first offer, then if we can't provide an offer, then take them to some of these other lenders that you work with. But you're giving your client the best opportunity to get the best funding offer and the highest offer. Plus, you're giving yourself the opportunity to make the most commission. There may be a lender or two out there that may pay a little bit more than DAC, but let me summarize that pay for you. So you're brand new, you get 3% on your first funded deal with us. But if you continue delivering business and you're getting a new funded client every 30 days, at least one every 30 days, your first client pays you 3%, but your second deal, you're going to make 6.6% on that second client, as long as it comes within that 30 days of the first deal. And then if you get your third client within 30 days, you're going to make 6.9% on that third deal. And after that, once you have 4 clients and a total of 40,000 in total funded value, now you're at 7.8% of the funded value that the client gets, as long as you bring a new client to the table at least every 30 days. And you'll stay at 7.8% as long as you stay amped up with that new client every 30 days. And then if you want to grow above and beyond that, start building a team where you can earn all the way up to 9% on your personal fundings and overrides on what your team does. So that's my take on agents that are coming in. I know DAC is an attractive program for those clients that don't have a great credit score and they're looking at DAC as the alternative. But I beg to differ. I think DAC should be the first choice for those that don't qualify for bank lending. So just wanted to throw that out, my perspective, after talking with the number of clients that I do on a daily basis, plus hundreds and hundreds of agents on a weekly basis, conversations that they're having with clients. And I just think that DAC is the absolute hands down best way to go for the client and for the independent agent that's trying to maximize their income.
Love it. Wade, what do you think about that?
Hey, listen, I had this conversation with Ellen earlier in the week, last week, and she's right on. She's spot on.
Amen. Amen. Well, listen, I have 2 more things. By the way, Someone had mentioned the startup funding. Be careful out there. There's a lot of companies who promise startup funding. They're going to charge big fees upfront, success fees. Some charge it in advance, which is illegal. And there's ways to go get it. There's a reason we haven't launched certain things already, because there's a lot of programs they'd love us to be marketing them right now. But they're not legitimate and they're not credible. So we're not doing it, but we're working on some things that'll be amazing. So if you're you know, in the space and you need startup capital, go try to get credit cards. That's the best way. It's the fee free. You're not going to pay 8%, 9%, 6% success fee for someone. Go to Capital One, get a Spark card. Go to, just go online and get an Amex business card. Go try to, you don't need to get a consultant to help you get startup funding, because all they're going to do is take you to the online lenders that exist and charge you a big fee to get success. And you have your credit pulled 50 different times. So just be careful with that. That's what I got to say about that. As far, Ellen, thank you for the comments. We should be first. Wade Cordell, this man you're looking at right here, literally, we talked many times per day, but every single day he's got a package in his hand, and never once. I wish I had a way to compensate him for all the times that someone doesn't take funding, because Wade's not trying to close them. Got an offer, got a funding opportunity, but Wade's job isn't to talk him into it. Wade's job is to make sure they understand it, to make sure it's the right fit. That feels good. I feel good. He feels good. We can sleep well at night. Sometimes the agents are, I wanted that. And none of us want people to take debt they can't afford to pay back. This is fuel, right? But I wish, because of the efforts he does and the work he does, him and his entire team, I wish there was a way to compensate for all the deals that get approved that aren't taken, so they could see we really do value that. I value that. It'd be nice for all of you to get commissions on every deal, but we really do want what's best for the agent and the client, and those things are synergistic. If it's not good for the client today, you may get a commission today, but you won't get referrals tomorrow. And I ran into my neighbor today, literally today. We had a provider. The name had a color in it. That's all I'm going to say. The name of the provider. And I got my neighbor to get funding, and he got $40,000, and he missed 1 or 2 payments. And they started going after him, attacking him with huge, amazing things. They ended up having to sue him. I've not gotten one referral from that neighbor again since. He's not happy. He's had to go to court to fight with them. We don't represent that provider anymore. They're snakes. We wouldn't use them. We stay away from them. But you know what? There's agents signing up with them every day, selling for them. And it is what it is. But we're building long-term. We're building long-term, guys. 15 years from today, we've got a reputation to uphold. There's nothing that bothers me more than a 1-star rating, especially when it's bogus. And I reply to every single one of them, because that matters to us more than anything. Our reputation, not because we want reps and 5 stars and 4 stars, because we want that business owner to go, hey, I had to pay a lot, but I knew it. But I had a better opportunity. It was the best offer available. They represent all the top providers. They got me the best offer. I said yes to it. They didn't talk me into it. Wade made sure I understood it. Brad made sure I understood whoever the provider is, and they feel good about it. So I thank you for that, Ellen, for your feeling. I believe DAC should be first too, because we're taking them to all the same providers as those other ones are, and not taking them to the ones they don't want to go to. We've already lived that. There was one other question here that I wanted to throw out. It was for, I don't see it. Okay, maybe that. Well, Wade, why don't you bring us home with your final thoughts, and then I'll wrap us up and we'll be done.
There's about 20 files right now, probably more, that we have incredible, really good offers for, and we can't get them back on the phone. So if you know that you are one of those agents, and because we've been contacting you, get them back on the phone, get them on the phone with me. I'm not going to pressure them, but if you can't get them on the phone, we can't bring them to the house for you. But for every one of those, there's dozens and dozens and dozens more that are getting funded every single day. And we really appreciate what you guys are doing. Nothing that you do aggravates us. I know you get aggravated sometimes, but I think if you can have more clarity of the reasoning behind why things happen, you honestly wouldn't it wouldn't upset you so much whenever something doesn't go the way that the client thinks it ought to go. I promise you, if there is a way to get that client funded, we're going to find it. Thank you, David.
Thank you, Wade. Appreciate you, my friend. Let me just end us out with this then. Let me remove the spotlight. Wade, thank you, buddy. Let me just end this training. Wade, thank you, man, for all the years you've been in this space and all the files you've talked to, all the clients you've talked to, all the underwriters you've met with. I mean, you go above and beyond. I couldn't ask for a better person to do what you do, and I'm so glad that Brad is following in your footsteps, and we'll be growing that department even more. We're automating things to make it better so that we don't have to chase packages. We'll just be talking to clients, so that helps us have more fundings without having to hire more staff. Everything we do, guys, we're trying to do it very, very economically so we can pay the field the most. I'm in the pay plan. Wade's in the paid plan. That's what we do. So, we're in the same pay plan as you, and we love it. It's amazing. We're recruiting new people. We're supporting people. We're getting clients just like you are. We love it. So if there's something that we see inefficiencies, we want to fix them too. I have 3 new personally enrolled agents I'm on the phone with, and I realize they've watched the training and they're still confused about a couple of things. We got to clear that up a little bit, right? If I'm not doing that, I don't know. We're always asking why and how to improve, and we're always asking for you. This training tonight was Michael Granados, his suggestion. So thank you, Michael. You're the one who said, "Can we go through the bank statements?" And that was on Thursday of last week, and here we did it. So if you guys have ideas, keep them coming to us. We're open. We're growing fast. We got a lot we're doing. There's a lot of priorities on the plate, but all of them will get implemented eventually. And where we are in 10 years, 15 years, 20 years, you're building a portfolio of agencies, just like a portfolio of stock. You don't need 100 company. You don't need to own 100 companies. Warren Buffett says, I wish every investor could only buy 20 stocks in their whole lifetime. They think a little bit more about which stocks they buy, and you don't need more than 20 to become a billionaire if you do it right. That's what he did. So you don't need 500 personally enrolled agents. You need a portfolio of effective agencies who want to get after it. Be an example, recruit people who are examples. Like Ellen said, there's a lot of people that aren't here tonight. They chose to not come. Some can't, we get it. They're going to watch it on recording. And if you're watching this on recording, good for you. Thanks for being here. God bless you all. Have a great night. And we'll see you Friday live at 11:30 a.m. for our Friday Zoom. Till then, go out and serve clients. Meet, greet, and inform.